What if you could just open any chart and just by looking at the chart, you could know where the market is headed, what the price is doing, where should your entry be, and not only this, but you will also be able to spot reversals. And everything, each one of this can be done through understanding market structure. Hello and welcome to Forex Monopoly. My name is Daksh, and in this video I'm going to tell you about market structure and also how to use it in trading, like for pullbacks, for breakouts, and also for reversal entries. Before we move forward, if you are new to this channel, then make sure you hit the subscribe button, and if you enjoy this video, then make sure you hit the like button. Let us first understand what is a market structure and how does it help us. The price basically moves in three ways. The first one is an uptrend where the price creates higher highs and higher lows. The second one is a downtrend where the price moves down and it creates lower lows and low highs. And the third one is a sideways direction or a range or a consolidation where the price neither creates highs nor it creates lows. It is just moving in sideways direction like this. So what market structure does is, first it helps us to find the direction of the market, whether it is an uptrend or downtrend, and then after that it also helps us to find entries. And not just that, but it also helps us to find out when a trend is going to change. So I'm going to tell you everything step by step, but first let us understand how to know if a trend changes. And how does market structure help us with that? Let us take an example of an uptrend. If there is an uptrend, we will see a market structure which would look like this, right? The price will continue higher highs and higher lows, and it will continuously do the same. Like it will create highs, lows, high, lows, highs, and lows and highs. Now, sometimes in the future, what will happen is the price will not be able to create a new higher high, and it will drop down and give us a new low which will be lower than the previous high low. And this will give us an indication that there is something wrong in the market, and that the momentum is shifting. That is, the momentum is shifting from buyers to sellers, because at first we were getting continuous higher highs and higher lows, but now the price is not able to make any new higher high and it created a lower low. And this tells us that the market has changed its trend. Let us take some examples to see how market structure can help us find the direction of the market and also how it can help us to find the momentum change. And then I will tell you how to use this to find better entries, and I will tell how to find pullback entries, breakout entries, and also reversal entries. So before we move forward, if you are liking this video, then make sure you hit the like button. Let us go to the chart and see and find some examples of it. So here we are on GBP US dollars 1 hour chart. So let us first try to use market structure to find the direction of the trend, and also how do we know if a trend is going to change. If you can see over here from this point, that is from this area, the price was moving up. It created a higher high, a higher low, then again a higher high, a higher low, higher high, higher low, higher high, higher low, again a new higher high, then a higher low, and it is continuously doing the same thing till this level. Until this level, when it is not able to make any new higher high, because you can clearly see that at this level the price is just moving till this level, and then it is moving down. It is again moving till that level, then again it is moving down, and again it is doing the same thing. So here finally the price is not able to move any higher. How does a market structure help us is, first of all, it helps us to find the direction of the market like we did over here. And then how do we know if the trend is going to change? So usually what happens is, when there is an uptrend, the price continuously creates these high highs and higher lows. Like it happened over here, the price created higher highs and higher lows. But when the price is not able to create any new higher highs and it creates a lower low instead, then it tells us that there is a momentum shift in the market, and then it tells us that the market can now move down, like it happened over here. Let us say this was the higher high, then higher low, then this was the final higher high, and then this was the final higher low. When the price moved below this low, it will create a new lower low, telling us that there is a momentum change. And so you can see after this, when the price was not able to move above this, it created a lower low. It again moved, gave us a higher, lower high, gave us a lower high. Then again it moved down, it created a lower low. And then you can see how the market started to move like this in a downtrend, and it started to create lower lows and lower highs, lower low, lower high, lower low, and lower highs. This is how you find the direction of the market, and this is how you know if a market is going to change the trend or not. Now, apart from this, there is one really important thing which you can do using market structure. The first thing is, there are 3 different types of entries which you can find by using market structure. The first one is the breakout entry. The second one will be the pullback entry, and the third one will be the reversal entry. Let us understand how to find breakout entries through using the market structure. Let us say at this point we knew that the market changed its trend, right? From an uptrend, it now started to move in a downtrend. Let us say this was the lower low which was formed, right? So what we have to do is we have to wait for the price to break this low and then enter at this point. So this will be our breakout entry. Our stop loss will be above this, which will be a safer stop loss, and you can also keep somewhere near here, but the best and the safest stop loss will be here, which will make sense, because if you keep your stop loss over here, it can just move, then again create a lower high and then take your stop loss and then move down. It will be better to keep your stop loss above this high. So this will be your breakout entry, where you enter after the price breaks below the low, like it happened over here. When the price creates a new low, you will enter a entry over here. Then again, let us say this was the lower low and this was the lower high, right? Let us mark this. This was the lower low and this was the lower high. So now what you can do is, when the price breaks below this, you can enter over here. But as you can see, the candle over here is too big, and if you enter over here, your stop loss will be too huge and your risk to reward may be very small. So in this case, what you can do is you can stop using breakout entry and move to the pullback entry. So let us see how to use the pullback entries. So you can use pullback entries using a different tool called as a Fibonacci retracement, from where you can just connect the Fibonacci from this level to the new low and then enter at the 0.618 level. If the Fibonacci is not valid, then what you can do is you can just draw a zone from this low. You will just draw a zone from this low and then just move it like this. And when the price retest this zone, then you can enter a pullback entry, so that you get a proper risk to reward ratio, right? Like let us say you entered a sell trade over here. This time you can keep your stop loss a few pips above this level, because this time we have a zone that is an important area. So for important areas, what you will use is a resistance area. So let us say there was a resistance area over here. So when you have a resistance area, and if you want to enter into a reversal trade, so what you can do is you can wait for the price to create a lower low and then a lower high, and then when it creates a new lower low, then you can enter into a trade, and hence it can provide you with a reversal entry. Now, as reversal entry will provide you with a high risk to reward ratio and the trade will last longer, what you can do is you can ride this trend until and unless you see a shift in momentum. That is, let us say you entered a sell trade over here. That is a reversal entry, because the price created lower low, lower high and a new lower low. So you entered over here and then the price started to move down. So in a downtrend, the price should create lower lows and lower highs, lower lows and lower highs, and again a lower low, and then it will create a lower high, then a lower low. So unless and until this pattern is changed by the price, that is, instead of creating lower lows and lower highs, if the price creates a new higher high, that is when you get out of the trade. And this is how you ride a reversal entry using market structure. I hope now you understand what is a market structure and how can you benefit using market structure. If you enjoyed this video, then make sure you hit the like button, and also do not forget to subscribe to this channel. Thank you so much for watching. See you in the next video.